Hi, I'm Rodney Brooks. Welcome to RodneyABrooks.com. My special guest today is Fred Griffin, retirement planner and principal at Silas and Ward Financial Group in Vienna, Virginia. One of the big mistakes is not understanding the different tax brackets and what little it might take to move you from one tax bracket
Right.
to the other.
Right.
For instance, when you start taking a required minimum distribution, it may actually move you into a higher tax
Probably
bracket,
will.
increasing your taxes. So basically, everyone should know what tax bracket they are in,
Right.
and
And
how
plan for that.
yes, and how close they are to moving into the other, and to do everything they can to avoid moving up. That's
Absolutely.
basically it.
Absolutely.
Okay.
Absolutely.
And any other mistakes, and then we'll talk about some tips you might have for people when it comes to
Yeah.
taxes.
One is you hit one of the main ones, ignoring taxes. One of the other ones that's major, because when I look at a retiree, they have a nice pool of money. A lot of my clients, they have a nice pool of money, but they don't have a plan that if they end up going into long-term care, they don't realize, especially in the D.C. area. In the D.C. area, that if you want to be in a private room for a nursing home, today that the average cost is about $15,000 a month. If you're in Vienna, Tyson, Virginia, where my office is, that's over $16,000 a month, and that's looking to double in 20 years. And that's usually at the point where you need it. Most people will not need long-term care today if they're 65 years old, but the average age is 83. So now you're at this age, and you're paying over $30,000 a month, and most people don't plan for it. So those are one of the ignoring the tax exposure, and ignoring the medical cost exposure. And 70% of people age 65 or older will need some sort of long-term care assistance throughout their life.
Okay, now long-term care insurance is available, and it's actually cheaper when you're younger. So if you're young and if you're a young person, it makes sense to start to actually get a long-term care policy because once you get to a certain age, it becomes prohibitively expensive.
It becomes prohibitively expensive as you get older, and also just to have some long-term care strategies when you're younger, because again, retirement age is not 3 lifetimes away; it's about 30 minutes away. But it's not dismal even for the retiree, because many times they have the assets there, and there's vehicles that will do a couple of different things, such as annuities that will pay you out income for the rest of your life. And if you have a long-term care event, many of these annuities will actually double in the payout for up to 5 years. So that's a really nice long-term care strategy that's not costing you extra money. You don't have to qualify. As we get older, going through underwriting for insurances, period, becomes more dismal because we start picking up acquiring more health issues, and that one is not a required, necessary underwriting to have a solution like that. So there's still strategies as we get older, but again, trying to plan it and on your own and not being aware of what's available to you is usually a downside to many people.
Okay. Calvin, any thoughts, any questions you want?
The one question I had, long-term care, is
Right.
there a way that you can protect your assets and money and have the government participate without them making you use up all of your resources?
It's a great question. Because Rodney mentioned long-term care insurance.
Right.
That's one strategy. The other strategy is having a hybrid of life insurance that allows you to be able to use some of the death benefit for long-term care, and that's available now. And the other one is, as I mentioned, are having annuities that will allow you to reposition, and they'll pay you more in the need of long-term care. But there's another vehicle that's called the asset vehicle. that kind of, like you said, protecting your assets, where you paying for coverage for long-term care, you're getting accumulation growth on it, but if you don't need it, if you never need the long-term care, the assets are still available for you. Now, so that's available. So there's becoming more and more options available. That's called an asset-based strategy. Now, the government helping you, the government will not get involved in or covering the cost of long-term care. Medicare doesn't do it, and the only people that will get any assistance is Medicaid. You would have to be proven to be indigent. So this is a real issue for most working people, because you need to consider a strategy in place, or look at creating a strategy, because once it happens, and it happens like a thief in the night. You know, we wake up one day and we have some issues where we need long-term care assistance, so we need to plan for it. It's kind of like no one drives anymore, or no one owns a home without having auto and the homeowner's insurance. And it's getting to the point, especially with these hurricanes, people are getting flood insurance and hurricane insurance, because if you don't have it, you're wiped out, and they can wipe out your wealth. And the same thing with not planning for long-term care.
Okay, thank you. Okay, well, thank you again. We've talked with Fred Griffin, Silas and Ward in Vienna, Virginia. Thank you for joining us.
Well, thanks for inviting me. Hope I didn't talk too much.